Hi, and welcome to The Importance of Pre-Approval. I'm Leif Boyd, owner and mortgage consultant with Granite Funding Group in Roseville, California. Our agenda today, we're going to talk about pre-approval versus pre-qualification, what the two differences are. We're going to talk about document review, what goes into that, what documents should we be looking at to pre-approve you. We're going to talk about your buying power. What does pre-approval do to your buying power? We're going to talk about being a banker versus a broker and what that means to the pre-approval process. And last but not least, we're going to talk about security in your offer. So starting at the top, pre-approval versus pre-qualification. What are the two differences? Well, pre-approval by definition means that a lending institution has reviewed your documentation along with your credit and a full application and deemed that you are creditworthy and that you qualify for the loan at those dollar amounts and at those payment amounts. Pre-qualification means a loan officer has simply reviewed your documents, pulled your credit, and said, yeah, this person qualifies. And honestly, on pre-qualification, by definition, they don't even have to review your documents. They can just have a full application and a credit file and say, based on what you state, you're qualified for this loan. So what documents go into a pre-approval? Okay, so if you are a wage earner, so you get a W-2, we'd need to see 2 years W-2s. We would need to see your pay stubs for at least a month, and we need to see any assets you're going to use to close. If you go somewhere and they don't request this stuff and they tell you that you're pre-approved, understand that you're not truly pre-approved by definition, and you could have issues at closing time. We see a lot of places taking shortcuts these days, and a lot of places, due to volume, especially some of the larger institutions, a lot of phone calls coming their way, cutting corners and telling people they're pre-approved, sending out pre-approval letters we've seen from, I'm not going to name names, but really from some large lending institutions, and we've spoken to the customer and said, did they request these documents from you? And we're shocked to hear that they hadn't. So truly not a pre-approval. Make sure whoever you're working with is guiding you down the right path and putting you in a position so you can close your loan. It's the most important thing. Buying power. 2 offers are on the table. One says pre-qualified, the other one says pre-approved. Pre-approved wins every single time. That's what the agents who are listing properties are looking for, the pre-approved buyer. So important. It's as good as gold out there. Pre-qualification letters, and a lot of agents will tell you, are barely even worth the paper that they're printed on these days because of the compressions in lending, because of some of the fallout. People want to see a pre-approved buyer. Make sure you're one of those. Banker versus broker. We're a mortgage bank. What does that mean to you, or if you're working with a mortgage bank, what are the differences and advantages? A mortgage bank is a direct lender. So that means we have underwriters on staff that can review your file. We can issue pre-approvals and say, yeah, you are good to go. You're good to make an offer. We're a direct lender. We've got money and we're lending it, and you are qualified or approved to go out there and make offers. Brokers, that's essentially by definition, right? A broker's a middleman. So a broker is going to another lending institution for your loan. Well, guess what? We have the ability to wholesale loans as well. And we know, just like the brokers know, that a lot of these big companies have cut off to be determined underwrites. That means unless you're in contract, that you actually cannot submit a loan to these wholesalers. So you have to go out, get in contract on a home, and then they'll take a look and see if you're actually qualified. So a lot of times if someone is simply a broker and they're issuing a pre-approval, you need to make sure, did they actually have an underwriter look at your file? Are we sure that you're approved for that? Are you getting the contract 25 days later when there's 5 days to close and you've got money on the line? You're going to find out that maybe there's some issues you didn't know about. Lastly, I guess that leads nicely into it, security in your offer. When you make an offer, you want to be confident that it's going to close. You're going to put an earnest money deposit in. You're also probably going to have a release of loan contingency. You have to be sure that what you're offering is valid and that it can close. That's the most important thing. Anyone can issue pre-approvals or pre-qualifications. Anyone can make offers, but truly you need a company that can close your loans. So make sure you find someone who is a banker, who has a solid pre-approval process. Ask them the questions. Make sure they request the right documents from you. And at the end of the day, you'll find your loan transaction closing. If you're buying a house, you'll get the keys. If you're refinancing, you'll get that rate that you've been looking for. Solid pre-approval process, one of the most critical steps in the whole thing. Thanks a lot for taking the time to watch this. Hope you have a great day.